All right, so welcome back to Fast Casual Nation, the podcast. This is a special episode. We will be doing these from time to time when we have a big breaking news topic that I want to kind of discuss with you and the audience out there around where fast casual is going. And today we're going to be talking about Yum's acquisition of HABT Burger for $375 million. So the big point here that all of the, I'll call them veterans in the fast casual space, many of them are probably saying out there right now, hey, we've seen this dance before, we know how it ends. Even if you look back to what's happened with Wendy's and Baja Fresh, one of the ones that I'll discuss here in a moment. But with Yum, this acquisition happened on Monday. The release came out. Yum was up a little bit, about 0.25%, and also HABT jumped a nice 7% for a $14 per share, or about $375 million. That was basically the roll-up for what was going to happen with this acquisition. Yum is expecting the transaction to have pretty much no impact on the brand, being since HABT is a publicly traded brand, on the brand in terms of share price in 2020. The deal is expected to close in the second quarter of 2020, and Russ Bendel is going to stay on as the CEO there at HABT. So that's kind of the facts of what's happening. He will, of course, report to Yum Chief Executive David Gibbs. Listen, I think, and I've had a couple of people already call me yesterday and today about this move and whether or not, where did I see it going, and whether or not the Better Burger category would be able to stand up to something like a Yum jumping into that. And if you look at where Yum is, they didn't really have a burger segment to compete with McDonald's, Wendy's, Burger King, et cetera. They needed to either make a play, which I think was a good move. I'm just not necessarily believing that this was the right move for Yum. There are some analysts out there that essentially are kind of corroborating what I'm talking about, and that is for a limited service QSR concept, predominantly being Yum, to jump into the fast casual space, Better Burger. Now there's only a handful of the Better Burger category segment leaders that are like HABT. And what I mean by that is HABT is kind of a bit of a hybrid. And we've covered them here on the show before, whether it's on the video show. And one thing that makes them different is they have a drive-through model, which is rare in most fast casual operations, or at least the ones that have been developed in the last 20 years. Their drive-through operation, great technology. They are more focused on drive-through sales, which I think kind of creates a hybrid role for them, and does give them a little bit of a market leader position when you look at, hey, listen, if I had to go to BurgerFi or go to Five Guys and I did need to get through quickly, can I go through and be okay with that drive-through? But if I'm competing in a market like HABT Burger is with companies like In-N-Out, who are essentially the dominant leader in what I consider small brand Better Burger. Won't we call them Better Burger, but they're up at the high end of the QSR chain. I'm just not sure that HABT can make that stretch. And this is going to be interesting to watch as we see the breakout in the coming years. If you look back at history, and a lot of people in the fast casual industry may not necessarily remember all of these numbers, but this is something that we've tracked for really 2 decades here at the network in my career. And if you look back go all the way back to 2002 when Wendy's International purchased Baja Fresh, and we'll talk about kind of the fresh mix category. But reason I think it's relative to what's happened today with Yum. So big QSR concept takes on what at that time was still a fairly young fast casual chain. At that time, a 249 unit restaurant chain. They purchased Baja Fresh for $275 million in 2002. Today, that would be about a $450 million acquisition. Now, if you look at that acquisition and compare what's happened with that company being Baja Fresh, since then, 2002 to 2020, 18 years in the making. In 2006, Wendy's sold that, at that time, a 300-unit location, Baja Fresh, for $31 million. Essentially, 10 cents on the dollar for their acquisition that they had just recently done. They did that to BF Acquisitions and Holdings, which was a private investor consortium that basically purchased Baja Fresh. And again, moving off of Wendy's. So Wendy's essentially jettisoned the brand, 10 cents on the dollar. This is a QSR chain that was not able to flip a fast casual concept into a profitable mechanism and make it work. They had severely declining sales, and there was a lot of problems. And I think this could be the case going forward. Now we are, almost 20 years later, and it is a different market, and I do believe now the mindset of QSR operators are different. But when it comes down to operational standards, QSR is still kind of king of the crop. They understand how to be profitable in a very competitive and thin margin business. And in fast casual, to be able to compete, you're going to have to separate yourself and become a differentiator. And I think HABT has been a differentiator in the past. It'll be interesting to see what Russ Bindell and his team do to be able to match up with what's happening over at Yum. Now, there's a lot of benefits there. If the infrastructures are delineated down to the brand, meaning real estate, analysis, a lot of the consumer marketing, as well as the supply chain management, there's so many advantages that could really play into this. But Wendy's had all of that in 2002 and couldn't make Baja Fresh work. So it'll be interesting to see, because if you look fast forward in 2016, I'm just following this investment that Wendy's made from 2002. In 2016, just 3-4 years ago, Baja Fresh sold again from BF Acquisition, and this time it was sold to the Canadian brand MTY Food Group for $27 million. So a continuous declining revenue and sale price for a fast casual flyer at one time that was considered one of the biggest competitors of Chipotle. That was Baja Fresh. So if you look back and now take all of those learnings that's happened in the past 20 years with the Fresh Mex space, compare that to what's happening right now in the burger cafes or a better burger segment, HABT is really on par with Five Guys, and they have a good product that can hold its own. Now, can they go head-to-head with In-N-Out and win the QSR war? They can't do it with McDonald's or BK or Wendy's because the price point just is not there. So this is a very interesting space for Yum to get into, and I think I would have to agree with the analyst right now in saying that this may not necessarily be the best move for Yum. So we will be covering more topics like this here on the show as breaking news or breaking topics hit the fast casual segment. I do feel that 2020 is going to be one of those years that we see a lot of these types of acquisitions, bigger conglomerates that are starting to look at buying smaller brands and creating a brand profile. Whether you look at someone like Roar Capital, who has been really investing in a lot of, I won't say all fast casual, but there are a cornerstone of fast casual concepts. And then Inspire Brands, what they are doing over at Arby's, whether or not they might start making a play beyond someone like a Sonic when they acquired Sonic, because obviously Sonic's still a QSR brand. Fast casual, I think there's a lot of players in the space that are under 500 units that are great targets right now for acquisition this year. This may be the first one of the year that we see. I think the cards are yet to play out. This is going to be a hot year to follow the news and information as we see things happening. And of course, we'll have some more follow-up on this in reference to how they're doing down the road, especially in the Better Burger segment with HABT and Yum. All right, so if you have not subscribed to Fast Casual Nation, the podcast, make sure and hit us up on iTunes. You can also find us over on Spotify. And if you're watching us over on YouTube, make sure and hit the bell and subscribe right there on the Foodable Network YouTube channel. We'd love to have you as a consistent viewer. We do a lot of different shows like this here from the studio. If you have an idea for a show, or maybe you have a senior executive at a fast casual concept that you think would be a great interview, send us a note to producer@foodabletv.com. We will catch you next time right here on Fast Casual Nation.